Good evening, traders. Welcome to this session. I hope all of you can hear my voice and see my screen clearly. If not, please let me know. Before we start today's session, a regulated disclaimer from my end. Everything shared in this session is only for your learning purposes and does not constitute as financial advice. Please note that being involved or transacting in securities markets is inherently risky, where an individual has a risk of losing partial or total capital. So please make sure that you get advice from a registered financial advisor before you make any investments in the securities markets. All kindly turn off your videos, or else your video will also your face will come up in the YouTube recording as well, because you'll be putting this video on YouTube. So please check and turn off your videos. Now, let's first start with a quick bit of analysis on the markets, what the markets did, and how are we planning to move forward. So if you those who have been following my messages, my tweets, and basically what I share on the Telegram community, you would have understood that this is the 2147 level is a level that we have been stressing repeatedly in the past few days. This entire range, basically, because this was a drive day, that is, this was an up move day, and after an up move day we had an inside range. So when this happens, when you see that particular profile shape is a trend profile, which in this case is a p-shaped profile, this one, and the next day is an inside day, then the lower value area becomes very important level. And we also saw a good amount of base formation in this area before the markets took off. This happened on Friday. Whereas if you see any particular day as a B-shaped profile, and then markets being inside the range on the B-shaped profile day, then the value area high is a very important reference. Guys, please don't try to annotate on the screen, or else I would need to remove your access. Please don't try to draw on the screen now. So considering the fact that we had a P-shaped profile, now one important aspect of a P-shaped profile is that after a P-shaped profile, when you see an inside day, the lower value area low becomes very important for us from a support perspective. Market formed a very good support area in this particular reference. This was something which I had shared in my tweets, I had shared in my messages on why exactly this area was important. Apart from that, you could see that we have a session POC at the high end of the day. Just a moment, folks. We saw that the point of control on Friday was to the day's high, literally the day's high, and the markets also closed at day's high. This is usually a sign of strong bullish activity happening. But did the bullish activity happen when you look at a trend perspective, that the market was trending lower for a few days and then the market started moving up? Guys, request again, kindly switch off your videos when you are joining the meeting. When you see that the markets are moving lower and you see this kind of a structure happening, then above the high of the day's high and the POC's high, the profile high and the POC's high would become a very important reference for a trader to get into fresh longs. But this happened after continuous rally, and the fact that the markets did not even test this area and then started moving down shows that after this move, some longs who built their positions in this area have booked their profits. That's the reason we saw the POC migration to the top. Now we have these two sets of information. One, the structure is bullish still. There is no reason to say that the structure is bearish. The structure is bullish, and we have a good support area. The markets also acted in the support area. Bulls acted in the support area, and we started moving up. At the same time, we have an area where buyers offloaded their profits, and early sellers would have pitched in. Whenever you see that one party books their profits, the other side will immediately jump in, if not in a heavy quantity, in a little less quantity. That's the reason why we saw this reaction here today. Now, for now, The same day's profile structure to the upside, that is, you have your 21,556 to this entire area has very important resistance to the upside and to the downside. So we tried to breach today, but we failed. So which is 21,594 to 21,550. This is a very important area as a resistance. To the downside, we have 21,400 to 420 as our support zones. So until we see that the markets are not breaking one side and order flow is not indicating the presence of fresh supply or demand, we are slowly moving back into those few days where the markets can again move up and down and up and down after a strong rally. Let's consider the fact that we are almost at the end of the calendar year. This is the global holiday season. So it would not be surprising to see a little bit of a silent activity where the market does not pick up a new trend. We already had a very good move in the last few days of the year. So mark these two references, one on the upper side and one on the lower side. And then make sure that as if you are an option buyer, if you are a directional trader, uh, as a directional trader, I would only be acting as and when these references, these ranges get broken and I see strong initiative activity as per order flow. If not, the moment price will test my support area, I will look to buy into the markets. The moment price will test my resistance area, I will look to sell into the markets. Even if I'm wrong, I would only be wrong by a few points. But as long as the structure, as long as the context indicates that the markets are in a range bound way, they will continue to remain so. Any questions so far? Anyone? Any questions? No questions. Not some, almost all the strikes were booked that day. I do not just look at the options market, but I also look at the futures markets. Options market is the largest markets, of course, in our NSE. But apart from that, I also look at futures, what kind of positions are being built across futures. View for tomorrow, that's exactly what I'm explaining for now. As long as the markets are in a range, let it be in a range. At any point of time, let us say you have 1 to 3 days of inside day, and apart from that, you have a trend day before that. So right now we have 4 days of action here. Whenever you see that the markets are trading in a range and from a short-term perspective, what I explained right now is more from a trend perspective for the next 1 to 2 days. But let us say that you want to understand the market direction. You want to understand where are the big guys positioned, where is the money flowing in into the markets from a short-term position. Then the ideal way to analyze it, one of the ways to analyze it would be cut the nearest gap opening area. This is the nearest major gap opening area. And then you just apply a fixed range volume profile on it. Just a moment. So right now, what do you see? From a data perspective, what do you see? You see that in this entire up move from the gap, it is very important that you start it from a very strong gap area if at all you are looking for immediate few days analysis. You see that you have a high volume area at 21,500 and then another high volume area at 21,300. So below 21,500 in the shorter term, maybe 200 points dip, which is your point of control as well, an important area from the short term, which is hardly in the current condition. 200 points is approximately 1% more. But apart from that, there is no reason right now to say that the markets can fall down to 19,000, the markets can fall down to 18,000 or views like that. As and when the sellers step in, as and when the market indicates that such a pattern is forming, then we will be taking the appropriate decision based on that. Then I'll be taking appropriate decision based on that. But until that happens, there is no reason to believe that the markets are going to give an immediate fall. So it's not, how do I say it? It's not a markets are not a merry-go-round in a circus where it just keeps moving up and down, or a seesaw where it keeps moving up and down. We had a strong up move. There would be some consolidation, and then we would get to see the next leg of the move, be it upside or downside. Right now, as I mentioned, the current structure is sideways. Anyone else? Any other questions? Order flow surge. I'm coming to order flow surge, Rahul. Let's first have a look at the analysis and the bias. Now let's have a look at Bank Nifty. Now, when I look at Bank Nifty chart, what do I see in Bank Nifty? Bank Nifty outlook is relatively weaker than Nifty, says Neil. That's right. And looking at the structure, Bank Nifty is slightly weaker than Nifty, or was weaker than Nifty as of the open today. You can see that again, a P-shaped profile, an inside profile, and by yesterday closing itself, we closed right below the value area, almost below the value area of the P shape and the inside structure. Now, from there, we started moving up, and you could see that the resistance was again at the POC of the primary P shaped structure D. Now, looking at that, it is clear that Bank Nifty is also in somewhat of a range bound structure at this point of time. It was weaker again, it was weaker today compared to Nifty in the morning, but by closing right now, it is more or less on par with Nifty when we talk about strength, that even Bank Nifty is range bound at this point of time. So right now there's nothing much left for us to do than we have our 3-day low. 3-day low is again a very important point from a contextual perspective. We have our 3-day low 47,772. And then we have the highs here, of course, all-time high 48,360. One need not wait till all-time high, but at least till today's high, which is POC. One interesting aspect with respect to Bank Nifty is that this is the point where passive sellers started hitting. And at this point, at 12:55, passive sellers stepped into the market, but a buyer took out these sellers. Now, even after buying, a buyer taking out the sellers, this is usually a very strong pattern. This indicates that this if this seller runs for cover, then there is a good chance that the markets can move on. But at the Friday's POC, the buying halted. In spite of the passive seller being taken out, that seller managed to recapture here. You see that when breaking down through the same area, this is what I call as the opposite effect or the counterparty effect here. Initially, a seller came in here. So if at all this area had to be taken out, buyers would need to put an equal amount of effort to take out the zone. But in spite of that happening, once again, buyers failed to take the prices further up. And you see these imbalances here on my bid side, a lot of imbalances. So this rather shows that a lot of sellers stepped in again in this area. So for now, 48,145 plus this POC high of around 48 to 28 to 30 become decent resistances in Bank Nifty. So as long as we see an opening around that area, then I would not be jumping to buy into the markets, but rather at those points, I always prefer to take small mean reversion trades. I won't even be adding my full size, but rather, let's say if I take a usual risk of 0.75 or 1% on a trade, I'd go with a 0.3% or a 0.4% risk on put on a small position as and when the markets are moving lower. I would be adding on to that position, especially when it comes to mean reversion trades. Any queries so far? Rahul, please ask. Anyone, any questions about the analysis? Is there any pattern in market profile to know which formation market can go sideways and when market will become trending? Is there any footprint in the market analysis? So when you look at volume profile, there are certain patterns of volume distribution. We have a few basic patterns of a single profile. We have a few advanced patterns of multiple days profiles that will give you a certain indication of things from a market structure perspective. But again, to confirm that structure, you will need to look at order flow, that is your footprint analysis in live markets. Anyone else? Any other questions? If value area high is crossed, what would be the point? If value area high is crossed, then I would be looking for the markets to continue to move high at this point of time, and I will look in order flow to see that if there is any momentum coming in towards the long side. Can you explain on how you came to the derivation of sideways move after seeing P profile the day before? Now let's take the example of Nifty for that. Now when you look at Nifty's profile, Atman, the Friday's profile was a strong P-shaped profile. Your POC migration was to the top. Usually after I see such a P-shaped profile, I would expect a gap up opening depending on the context. But the markets had already run up to that point. Again, that is of no strong reason that the market should not gap up, but it is one of the factors in play here. I repeat, that's no compulsory reason that markets इतना ऊपर गया तो इससे ऊपर नहीं जाएगा ऐसा कभी आप मत सोचिए. But इस केस में if you look at multiple parameters, that is one small parameter. So in spite of having such a strong rally and a P-shaped profile, the markets did not gap up, but instead it opened lower. But the fact that we had a balance period here, a good amount of sideways drive, and then an up move. Apart from that, the entire value area here suggests a good amount of buyers coming in. My the 21,400 level act as a good support, but to the upside, this area would act as a resistance. So between a good support and resistance of the previous day, plus the fact that Monday's profile is a balanced profile for me, tells me that the structure of the markets at, no, at the moment is sideways. I will be recording this meeting. This meeting is already in recording, and the recording will also be shared, folks. Don't worry. So you need not record it separately. What books are recommended to learn market profile, volume profile, order flow? There are no advanced books. There are a couple of very basic books that explain what is volume profile, what is market profile. I'll share that in some time. Do we short after value area high is crossed, or should we wait for price to return to the value area or accept in the value area before we short? You will not short after value area high is crossed unless there is another structural resistance to the upside. But instead, if you are looking for a reversal trade, you will always wait for price to get into the value area. For example, here if you see, let's assume that there was no profile Friday's point of control at this point of time at this particular area, and you see that there was a passive seller here, and then the markets took out this passive seller until this level is reclaimed again, until the market again comes below this point. It doesn't make sense to short, because once there was a very high chance of this seller running for exit. Do you deploy monthly positional trades based on order flow, so does it require more adjustments compared to weekly? No, order flow is strictly an intraday tool for me. It's strictly an intraday tool where I look at the real time supply and demand to analyze what's happening in the markets, and that's it. Now, any more questions? Are we going to cover order flow search later? Yes, I'm coming there to order flow search. How do I use these tools in Go charting? I'm new to Go charting and I faced some issues in the past. Please check out the Go charting Discord community where the team always will answer your queries. Apart from that, check out their YouTube channel as well, where there are a lot of videos and information posted about order flow analysis and volume profile. Now, let's talk about order flow search. As most of you know, a few weeks back, many of you got complimentary access to a tool called as order flow search for marketing. What exactly is order flow search? Order flow search, to repeat again, is my own proprietary tool that is used to track abnormal institutional activity. Certain things happen in the market at certain point of time. For example, when the markets are moving down, you will see certain volume activity that stops the market's downside movement. You will see certain activity that stops the market's upside movement. So why does this happen, or what exactly triggers this particular phenomenon to happen? Order flow search tracks it. Some of you have already started using it and you have asked me questions, and you are I see a good positive response to them. For those uninitiated, let's have a look at it. Now, before a reversal move comes, or before a strong trending move comes, at certain key price points, again, any price point that you think is important on a chart will only become important when institutions start reacting to it. When institutions start reacting to a price point, when I see abnormal activity, that is, someone is selling into the markets a lot, but at the same time, a certain counterparty is absorbing all the selling and buying so much that the selling is absorbed. When this happens, order flow search will show up. It also helps to identify high probable high of the day and low of the day analysis. So how do you enable order flow search? You go to FX study, go to order flow, and click on order flow search. There is an earlier YouTube video posted on the basics of order flow search, which talks about the which talks about the basic fixed settings for order flow, and apart from that, how to use order flow. In today's video, we'll be talking about a component of order flow search called as hyper search. Special variation of order flow search for the current intraday markets on a very micro time frame, that is on a 1 minute and a 3 minute time frame. You get to spot the areas where we are seeing aggression or abnormal volume activity by institution. Can be either trend reversal or strong trend continuation. In this lower variation of order flow search, so in this special variation of order flow search on a lower time frame, we also consider the speed of ticks, the rate at which the market has moved recently, and the range of the market movement into consideration, because we retailers use time frame to trade. We as retailers use 3 minute time frame, 5 minutes, or 15 minutes time frame to trade into the markets. But not everyone does that. The and time is very arbitrary. You can what you are seeing in 5 minutes, someone else may see it in 15 minutes time frame. So time is a very subjective aspect of analysis into the market. Apart from time, one independent way to look at the markets is looking at something called as range analysis, which is considered here. Now, for example, let us take the 1 minute time frame. The most important aspect of using order flow search is that you modify the tick settings, the block settings here. Make sure auto mode is unchecked and you input the proper block size. Apart from that, you make sure that the format volume is turned on and you input the lot size properly, the correct lot size of the index futures. You can do the analysis on futures chart, but even if you are an options trader, that's totally fine. Because the primary mode of analysis is always on my futures, but not on options chart. Now for this week, for a 1 minute time frame, I am using a block size of 54.37 or 54.3 to be precise. Now, how exactly did I come to this block size? These are my hyper search settings. How do I come to a block size? I take into consideration the range movement on a particular day. One moment. I take into consideration the range movement on a particular day, and then based on that, I input my tick size. For example, let me open the right Excel file. If I have to look at Bank Nifty's hyper search, then I input the last 5 days average true range. Okay. The key is my last week's Monday, Tuesday, Wednesday, Thursday, and Friday average true range on a daily time frame. I bring out the average of it, I calculate the average of it, and then based on the average of it, I divide it by the number of bars in each time frame. Primarily, I focus on 1 minute and 3 minutes. So I have a 1 minute block here and I have a 3 minutes block here for my current week. So these settings have need to be modified on a weekly basis. The market is too dynamic for us to work with the same tick size on such a data set or on such an analysis method that we can use the same setting always. So this is where the hypersearch settings are dynamic and change on a weekly basis. Subscribers would be getting access to this Excel file as well, where they can check the tick settings once a week and then update it in their Go charting templates. Now, if you see, so again I go to order flow search. I turn off spike. I don't want spike. Spike is for a totally different purpose and reason, which I'll be explaining later. It needs certain modifications. Our primary focus would be on surge, which is the strongest of the signals. So if you see here, on my initial 5 minutes time, on 1 minute time frame, the 9:15 candle indicated order flow search for me. Now, what exactly happened at 9:15, that right at open in the 1 minute bar itself, the indicator which we are using is indicating that there is abnormal market activity by large players in this bar. Something happened in the background. There was a certain amount of pressure put by certain participant who tried to drag the markets in his direction. We look at the signals on a 1 minute time frame, but simultaneously, well, if I'm an aggressive trader, I would be using a 3 minutes time frame, or I would be using a 5 minutes time frame for me to validate what is happening in the markets. So if my signal came in at 9:15, this 3 minute 9:15 bar becomes a very important reference point for me. And you can see the kind of move we had in the markets. Once the 9:15 bar's low was broken, we had a strong down move from 21,480 to 21,420. Again, from a structural perspective, why is 21,420 important? We discussed some time back that volume profile tells us that 21,420 is a very important zone, 21,400 to 21,420. These lows. Clear? Or any questions until here? Understand that this is not a blind buy above this or sell below this tool. As a trader, no matter what analysis you are using, as long as you have some clarity on market structures, order flow search will help you to identify important price locations in live markets where a lot of activity is happening. And activity, this is not just normal volume activity. I don't look at some critical delta level, which is very subjective, but rather I compare it on the basis of what is happening in the markets. If someone is coming with 1,000 lots of market order, and this guy has market sell order, buy order, sorry, and then there is a certain amount of pressure put on this 1,000 lot market sell order. And if this pressure is to such an extent that this guy will now run, unwind his positions and run for cover, order flow surge will highlight it from. Clear or any questions? Can we use this surge around value area high, value area low and point of control? Definitely you can. Having an understanding of the market structure is very important no matter what analysis you use to trade. How do we know if this How do we know if this is for upside or downside? Again, I just said a few minutes back that this is not a blind tool where you just buy above X or sell below Y. Today's market structure after this opening bar, for example, if you look at as an additional, if you look at the footprint bars, for example, does this indicate any kind of buying activity? In this case, no. We had a flat opening inside the range, and this is a candle with a long tail. And right when this low is broken, you can see imbalances coming in. Most of them are sell side imbalances, that is your bid side imbalance, apart from this one bar. Clear? So the structure of today's market was indicating a sideways chop at open with a bias towards the downside because there was a lack of buyers activity with 21,420 being an important reference. Surge highlights to you in this bar that certain amount of pressure is being seen in the markets and that a move lower from here can give some very good trending directional move to the downside, which came until your 21,420. So do we need to track ATR values for each week and updating the Excel? No, you need not track or update. I will be updating it at the end of the week that you can use for next week. So is it market orders in a certain size trader and why? No, it's not just market orders in a certain size. What happens in the market from when if you want to understand whether at a certain point some guy who's long into the markets is going to be in deep trouble or some guy who's short in the markets is going to be in deep trouble, it's not just looking at the individual volumes but it is comparing with the weightage of the pressure being put on that particular order or a participant in that particular time frame or in that particular tick range. How do we one moment. When surge appears on 1 minute, we need to wait for a 3 or a 5 minute candle close below. Ideally, Cinderella, yes. Because if we are only using 1 minute's time frame here to understand the presence of higher volume activity by large players. But apart from that, we as directional traders, it doesn't make sense to use a 1 minute time frame purely to execute our positions unless we are scalpers. Clear? Anyone else? Any other questions? No. Subsequently, you see that now once that particular round of selling was done, that particular round of short side activity was seen, we saw the presence of a few more surges at 10:36, for example. This is your 10:36 bar on a 3 minute time frame. Now, these bars, if you look at plain order flow, they don't tell you much. The largest passive activity happened to the downside. But for purely from an order flow basis, the 10:36 bars, or for example, here, the 10:51 bar does not tell you much. But if you look at the search settings here, then as and when the markets are moving up after the presence of this passive buyer who had come in at lows, we were seeing surges. We are seeing surge signal indicating higher volume pressure or higher institutional pressure in these areas. And when the opening surge area where the sellers had done a lot of pressure, this particular bar was taken out. The reason why buyers had to step in this location is because they had to muster enough force, they had to put enough pressure on the markets to take it above this initial sellers area. And once you see that it happened, we saw a strong up move. We saw a very strong rally here to the upside. These kind of volume activity you don't get to see in every candle. Every price point is not important. Every number that you see on order flow is not important. At certain locations, something happens in the background, and most of it happens in a silent way. The volume activity, that is exactly what order flow search helps you identify. And then through the day, the market was trending when we got a signal at 246 here. This is where we got a signal at 246. You have to look at it in the 3 minutes time frame. This is the bar where we got the signal right from 21,560. The markets went back to 21,515 in a flash. Again, why is to 21,515 important? It is our initial opening search bar. Again, the counterparty effect applies here. Clear? Kindly show on Bank Nifty chart. Sure, we'll also look at Bank Nifty. Alright. 14.14 is my block size for Bank Nifty. This is my open at 9:15. This is where at 9:28 we first saw certain amount of surge activity, where at 9:28 for example. This is 9:27 bar, 27, 28, 29. So this 3 minutes bar, let me highlight that, is where we saw the surge activity. Initially there was an up spike, and then subsequently there was a very strong down move. So if you pick such selective locations where looking at certain information, just a moment. 19th, 1 moment. Oops. Can you all see my screen? Can you see my screen here? 928 bar, sorry. So Tuesday, 19 December, this was the initial signal. After this particular signal, this is where we had at 11:44. So the whole point of explaining this on both Nifty and Bank Nifty to you is that if you pick such sweet spots and looking at structural in perspective of a chart, you look at the structure of a chart to understand, and you use such selective sweet spots to enter with an understanding of what the market is doing. Sure, there will be those occasional losses. No one can deny us that, and it is part of trading. We will definitely have losses occasionally now and then. But the potential reward, the reward that I would be making as in my winning trades would be very big compared to the losses that I would be giving to the market. And in the end, that is what matters primarily to you. The goal is not escape losses, but keep the losses as low as possible and make sure that your winners are far bigger than losses so that even after charges, commission, and everything, we still turn a net profit at the end of the month or at the end of the quarter. Clear? Any questions? Anyone, any other queries? So far, I have got quite some positive response on people using search. As I said, the order flow surge is temporarily open for all the traders started on December 5th, and it will be available till around Jan 3rd or 4th, after which this particular data analysis tool will only be available on a subscription basis. Now, since we are launching the subscription of order flow surge officially, people who enroll before the official launch date, which is January 5th, will be having a fixed pricing for life where for them there will not be any future price changes applicable, that the price that they pay now as a part of the subscription basis will be the price that they will be paying even in the future. Even when the price increases, they will be paying the same price. There will be special learning sessions on using order flow search for the subscribers. And we'll be, of course, having a community where we will be updating purely the indicator related software updates and the end of the day meeting updates that I'll be conducting for the members. If you have any questions, feel free to reach out to me on the below given Telegram and email address. And the subscription fee on a monthly basis for order flow search, since this is an add-on tool, will come to around 2000 rupees per month. Okay. So anyone who's interested in grabbing the official launch offer where the pricing is fixed for life, feel free to reach out to me on this Telegram ID or on my email. I'll also be putting the same message in Discord community on co-chatting so that you can reach out to me. Apart from that, if you have any further questions, feel free to reach out to me at any point of time. Okay. Thank you all for joining this session and have a good evening.